I have a cheering squad in the front row here, so whenever I say something good, they're going to go, yeah, way to go. You have to bring your own personal group. Jane, thank you so much for allowing us to have this panel, for inviting me to participate in FinTech Week and Blockchain Week. I've done a number of speaking engagements, and it's been absolutely fascinating in spite of our coronavirus. So the issue is central bank digital currencies is in the news daily. And what we're going to cover in this panel are 4 different areas. First, why are we talking about this topic? Secondly, what exactly are central bank digital currencies? Who are the international participants working on this topic, and what are some of the central banks doing? And finally, what are the geopolitical issues that are impacted by central bank digital currencies? So our panelists will cover this topic. Obviously, we're not leading world experts in this space, but where we do come from, I started my career at the International Monetary Fund, and I worked at the US Treasury with Secretary Brady, and I worked here in London at the EBRD, and then I moved to banking, and I was at Citibank and Barclays, among other things. But my career and my education has focused largely on international monetary issues, and that's my interest in central bank digital currencies. I've been involved in blockchain for the past 2 years, 2.5 years, so I guess I qualify as a leading world expert, since this is a new space. But I have been studying this topic because I think it's very influential and impactful on the international monetary system. So I have my 2 distinguished panelists who thank you very much for joining me today. First, we have Carlo Coguzzo, who's been following the issue very closely for the past several years as an economist at ING here in London. He participated in the World Economic Forum's working group, creating the Central Bank Digital Currency Toolkit, and he's chaired multiple forums discussing the topic. His current research focuses mostly on central bank digital currencies through the lens of a macroeconomist, we won't hold that against you, and capital markets professional, which I think is very important because there is a banking angle to this. He links his understanding to the foreign exchange market and to remittances. My second panelist, Arwen Smit, has a solid understanding of the geopolitical issues surrounding central bank digital currencies, and she's done a lot of work in blockchain, identity, and privacy fields. She wrote the first white paper on tokenization of the transportation sector, co-authored the world's first blockchain standard for vehicle identity, and she's the author of Identity Reboot, which reimagines data privacy for the 21st century. I believe that book is coming out shortly, right? Monday. Monday, you will be able to get Arwen's book. And because payments carry data profiles, she's very interested in the geopolitical implications. So that's our introduction. It's a complex economic topic that has practical implications. So we're going to endeavor to be very clear and enable you to wade through some of the weeds and miscommunications of the current press on this topic. But I want to say one overarching reminder about money. The governor of the Banque de France recently said in January, "Currency cannot be private. Money is a public good of sovereignty." And I think that's a really important point to remember where the central banks are coming from. So our topic 1 this morning is, why are we speaking about this beyond what's in the news? I can tell you, I was listening to Fed Chairman Jay Powell speak to Capitol Hill about 2 weeks ago, and he said in his testimony, Libra lit a fire in our thinking. So Libra lit a fire, but this work in central bank digital currencies has been going on for quite some time. So my first question to the panel is, and Carlo, you can begin, what are the issues that central bank digital currencies are trying to solve in a broad picture? Carlo?
Thank you, Emily. I think that there is no one-size-fits-all solution when it comes to central bank digital currencies. Each country has its own use cases, and depending on whether you're looking at the emerging market world or the advanced world, you have potentially different use cases. But generally speaking, there are three key reasons why central bank digital currencies might be launched quite soon. The first one is on payments, and particularly on payment inefficiencies. In the advanced world, this is more to do with what we call wholesale payments, not necessarily retail payments, which already work quite well in some of the countries. And some of the, for example, in the US, they've just launched a new 24/7 retail payment system, so they are moving quite fast there, domestically. But on wholesale payments, so wholesale, I mean banking transacting with one another, that's a whole other topic. And there are so many inefficiencies in that market yet. So that's what happens in the advanced world. Now, in the emerging market world, we have also inefficiencies also on retail payments. And this is where central bank digital currencies potentially could come in. As Emily just stated earlier, obviously Libra has been a wake-up call for central banks, so this is why we're looking at this. The second reason is access to central bank money in an increasingly digital world. If we look at Sweden, the usage of cash is going down substantially and dramatically. Same thing is happening here in the UK. So one of the key questions that central banks are actually scratching their head at the moment is, well, in this new digital world, if people are not going to be using cash anymore because they don't want to use it, shall we provide them a new digital means of payment that is central bank issued? So that's the second reason. The third reason relates to the unbanked, and I like to link this topic with the remittances market. Let me give you some stats. Why the unbanked? If you look globally, there are 1.7 billion people unbanked, and yet 2/3 of them have a mobile phone. That's the first point. The second point, why remittances? Sending remittances is quite an expensive business. If you want to send money cross-border, say that you work in the US and you want to send money back home, that will cost you on average 6.8%. That's quite a lot. And that's excluding the exchange rate fees. If you look at the different channels for sending these remittances, banks are the most expensive remittance service provider, and basically costs you an average 10%. Now, what Libra is promising to people is that they can do this on a much cheaper basis. So that's why central banks now, they've got this wake-up call and they're thinking, okay, so how should this work now in the future? So those are the key reasons why we are looking at this, I guess.
So a common critique of cryptocurrency in general, including stablecoins, is that governments are protective of their right to control the issuance of currency and the supply of money. So now you can see why central bank digital currencies flow into that protectiveness. And I think, Arwen, can you give us some ideas of governmental incentives behind central bank digital currencies in the light of their being protective to control the issuance of money?
I think it's an absolutely fascinating topic because on one hand, we've seen a lot of globalization over the past few decades, which came with additional complexity. And Carlo, as you rightly pointed out, a lot of inefficiencies that we can definitely benefit from with new technologies and new types of constructs such as CBDCs. But if you look at the governments themselves, if one of them moves, they all need to move. So they all at least need to understand what is happening. So right now, if you look at the world economy, the dollar is dominant. It's dominant in a number of different ways. It's basically the currency that is the foundation of our entire FX logic. Now, if you are a country whose geopolitical position has changed in the past decades, such as China. They've changed dramatically in their bargaining power. We're reminded of that basically every day that we open a newspaper. Wouldn't you be very much incentivized to get the dollar out of your own sovereign system and indeed reclaim a portion of that control, Emily, you just pointed out? And if you would be Russia or Iran and the US would pose sanctions on your country and you see as a result your own currency just absolutely take a nosedive, wouldn't you also think, okay, so what are the alternatives actually at my disposal so I can assert more control in the future when something like this happens, but from a point of control such as the central bank, as opposed to the more open public blockchains that are currently being reverted to. So when the US posed sanctions on Iran, for example, the currency went down, Bitcoin trading went up. If you were the government, you would much more prefer that if you would issue a central bank digital currency and via a number of different structures, if private alternatives would be tied to that at least then that way you can assert a bit of control. And then the fourth reason is obviously modernization. Countries like Sweden, they are obviously very interested in this from a perspective to future-proof their monetary structure because they are transitioning to a cashless society. So governments around the world are looking at this for different reasons. And the last thing I wanted to mention is, yes, Libra lit a fire, but a lot of this work has already been going on for a while. So China has been putting out papers at least since 2014 that we know of.
Absolutely. So you kind of see the point of this is to explain why are we talking about this, and you can see from our discussion that there are a number of different angles. There's not one size that fits all. Our second topic is we're going to attempt to define a central bank digital currency, and it will come in several parts. One of the major problems and one of the major reasons that we are all working together is that blockchain and crypto is a space that does not currently have a common taxonomy. Words are used interchangeably, but definitions are in the eye of the beholder. And that's particularly true in central bank digital currencies. If you think everything already is digital, so why is the word digital in a central bank digital currency? So the lexicon is muddled, and so today I'm going to ask our panelists if we can come up with a definition of a central bank digital currency. So Carlo, why don't you start with your view of a definition of money, how is it created, what a central bank digital currency is not, and a little bit about the sovereign piece of central bank money supply.
Sure. So I'm an economist, and economists don't agree on anything. So when it comes to discussing and debating about money, we all agree, though, that money does certain things. We don't agree on what it is, but we know what it does. And money does three things. It's a means of exchange. We can use it to make payments. If we don't have that, we would just barter with each other. Secondly, it's a unit of account. It's a common measure for us to exchange goods and services. And thirdly, it's a store of value. So we can use it and presumably has to keep its value over time. Now, when it comes to defining CBDC, one of the key challenges is that it's very unclear, even to economists, what it is. It's digital, but is it electronic money? What is it? Well, the easiest way to define it, I think, is to start from what it is not. So CBDC is not a payment method. It's not Apple Pay. It's not Maestro. It's not that. So that's the first misconception. The second misconception is that CBDC is not electronic money. Commercial bank deposits are electronic money. When you have your money in your bank account, that's money, but it is not legally money. It's not issued by a central bank. Now, CBDC is issued by a central bank. So the best way to define CBDC is to say that it's a digital sovereign currency, and sovereign is the key word because it's issued by a central bank and it's legally accepted as a legal tender. Today, we live in a world where 90% of the money in circulation in the economy is created by the banking system and by borrowing short-term money from customers and lending them long-term to other clients. Now, how does CBDC fit within this new world? How does it work? How would it work? And this is where things get a little bit more complicated. But let's just say, for now, it's a digital sovereign currency. And it can be retail or wholesale. Retail, only for people, wholesale for banks.
And Carlo, can't it also be a replacement for cash or a substitute for cash? In other words, they could take cash out of the system and replace it, or they could create, instead of creating more cash, create a central bank digital currency version?
Sure. So central bank digital currency can be a substitute for cash or potentially for commercial bank money. So the way this works is the central bank basically substitutes the current existing supply of cash with a bit of central bank digital currency. Now, in that world, the balance sheet, what we call the balance sheet of the central bank, does not change. Only changes the composition of what's in the balance sheet. But central bank digital currency could be issued to buy other assets or other things. I don't know if you've heard the quantitative easing stuff, but that's what the central bank does. They buy given assets and they issue money in exchange for that. In that world, you can issue CBDC ex novo, but the crucial thing to understand is that this is not created out of thin air. This is something that is in the central bank balance sheet ultimately. So to answer your question, Emily, yes, it can be a substitute to cash or commercial bank money, or it can be issued ex novo.
So this is a question for you, Arwen. Is blockchain or DLT even involved? Does it have to be involved in a central bank digital currency, or could there be another basis for that introduction?
Okay, to think about that, we first need to understand what kind of models are at our disposal of shaping a type of central bank digital currency, right? So let's walk through the three most well-researched ones, right? The three most popular ones. So the first one is called account-based. So there you can imagine that a bunch of retail investors, like this room, all have accounts directly at the central bank, and the central bank in those accounts directly issues the central bank digital currency. Well, a natural implication of that is that that comes with the operational burden of actually being a commercial retail bank. Only then that burden is placed at the central bank. So that is situation number one. So situation number two is within the same family. So the central bank would still issue a central bank digital currency, but to third parties, and these third parties hold the accounts of the retail investors. They hold our accounts. So the central bank still controls the monetary policy and the thinking around the issuance of central bank digital currency, but the operational burden is in the second layer, right? Very different than the first example. And then the third one is very interesting, and that is called synthetic or hybrid CBDC. These terms, gold. Anyways, that's the third model. And the central bank in this particular case still works with the third-party banks, and these third-party banks still work with the retail investors, but the relationship is different. So the action is actually driven from the second layer this time. So for example, a third-party bank could issue tokens or any other form of digital currency to the retail, but in order to do that, they would need to request central bank digital currency from the central bank. So the dynamics of this third model are different. So a type of implementation of this third model is what WeChat and Alipay are currently doing. So they issue a type of credit to people, but they are required to hold funds at the Chinese central bank. Now, if you look at these three models, for account-based, it is clear that you don't need blockchain to do that. But for the second and third model, you could consider it, especially in the third model, when there are tokens involved. Now, if something like that makes sense, very much depends on the actual policy goals that you are trying to achieve. Are you looking for more control or less strain, less operational strain on a central bank level? Are you looking for broader adoption? Do you want to encourage this second layer, these third parties, to use a type of open source code or a type of audited code so they can embed the mechanisms required for adoption more quickly into their products so it can reach more people, so it can become more digitally inclusive, so people can get more access? It very much depends on the traditional, which most of the people in the blockchain are familiar with, trade-offs between centralization and decentralization.
So I think you can see that there's complication in this, depending on the central bank's monetary policy, authority, control, and desire. There is a massive difference between retail usage and wholesale usage, which could be several different models, and there may or may not be use of blockchain or DLT in that mechanism, depending on which model they choose. We'll leave that massively difficult concept and move on to what's been happening in the space. There are a lot of international bodies involved. The Bank for International Settlements has recently, as of January, created a working group with the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, and the Swedish Central Bank, and the Swiss National Bank, to basically look at sharing experiences and different kind of use cases for central bank digital currencies. And they're working, of course, with the Financial Stability Board and some other international regulatory bodies. And that's being housed out of their innovation hub. That is a massively significant development. And the reason is the BIS is the be-all, end-all regulator for banks on a global scale, and they have been very negative previously on this entire topic. The World Economic Forum, as I mentioned, Carlo worked on the committee, created a central bank digital currency policy maker toolkit. While that may not actually be used, it brought together a number of experts in both the regulatory and the non-regulatory to discuss the kind of framework and get some common terminology. You can imagine that the International Monetary Fund, who is the global thought place regulator for international monetary policy, has been very involved. There are a number of staff papers, blogs. Christine Lagarde has spoken a number of times on the topic, and she is continuing that in her role at the Central European Bank. But in addition to all that, there are many central banks experimenting, and there's a lot of difference in their experiments, whether they're in development stage, in pilot stage, whether they're emerging markets central banks or the G20 central banks. So Carlo, can you give us a few examples of what central banks are doing in this space right now?
Sure. So I'd like to start from, well, since we are in the UK, the Bank of England, but this can be sort of applied to any central bank at the moment. The kind of attitude towards central bank digital currency seems to be, well, we are not planning to launch any CBDC, but we will keep an eye on this. This is the kind of attitude that everybody's doing. If we look at the Bank of Canada, for example, last week they just issued a paper saying that they are planning to create a CBDC contingency plan. Now, that contingency plan means that they are not planning to launch CBDC, but they want to learn to build infrastructure. Maybe in the future, should the need arise, they'll consider that. So on the retail side of things, central banks seems to be much more involved because that's where all the hurdles are. The Bank of England and the Bank of Canada very much advanced in this space. The Riksbank in Sweden probably is the central bank that has done more work than anybody else on this. They've been working on a pilot test of this digital currency called e-Corona. And they are planning to do more work on this year. And in the last update that they issued a couple of weeks ago, I think 2 weeks ago was that, they are experimenting a hybrid model. So in other words, issuance by the central bank of this new digital currency, and then a distribute model underneath with different entities entering into the distributed ledger environment that they are building up together with Corda. Because one of the key hurdles for any central bank is how can I make sure that I have a system that is scalable, but also that is safe, is secure, it's safe. Last thing that you want as a central bank that you get hacked. You don't want that. So there is that sort of fine line. And then there are a couple of other institutions, like in the emerging market world, we have the Central Bank of Ukraine, for example. They've been doing a pilot test on e-hryvnia, their local denominated currency. And it is more focused on payments in that case and less on it's a little bit different from what's happening in the advanced world space. But they are sort of doing more work in that area, in that space, and we can expect more this year from them. On the wholesale side of things, and when I say wholesale, it's imagine wholesale, banks transacting with one another, that's what it means. That's where things are less disruptive for policymakers, because to be honest with you, there are a lot of inefficiencies in cross-border interbank markets, and banks know that. If one bank wants to make a transaction with a country that they have no other branch locally there, they need another bank to act as an agent to facilitate the execution of the transaction. That's a costly business, and it is really costly. So very slow and inefficient. Different time zones, the systems don't work 24/7. It's very painful, a lot of pain points. So what banks are working at the moment on that space is to create a platform where banks can exchange digital tokens directly rather than relying on other banks. So in the future, we may imagine banks starting to transact with one another using digital dollars or digital euros or digital whatever. So that's the kind of world that they are looking at. And in this space, there is a project by the Bank of Canada, the Monetary Authority of Singapore, and the Bank of England. It's called Project Jasper, UBIN. And the other project is Project Stella. This is a co-partnership between the European Central Bank and the Bank of Japan. And then the last one is the Utility Settlement Coin, which is an initiative done by this Finality organization. And it's an interbank cross-border payment platform using distributed ledger technology.
So you can see there's a lot of effort going on, but I have to say, I don't think it's going to happen in 2020. This is really complex, but I do think that the topic will evolve with the central banks. But before we close, because we only have a few minutes left here, I really want to get into the geopolitical issues of this. Because I'm a student of international monetary policy, and I learned Bretton Woods when I first went to graduate school. And that was the standard. And now I'm looking at it, and the final topic that we're going to cover, are central bank digital currencies, is it a new monetary world order? Is the US dollar reserve currency status threatened? Is there a national security issue in terms of countries who may be entering into this space? So should our governments, whether it's in Europe or the United States, as you can tell I'm American, but I'm also British, is there an issue on the national security level? And is China a game changer in this space. So we will end with a bit of a geopolitical. Arwen, do you want to start on the geopolitics of this issue, which are pretty significant?
Yeah, I would love to. So let's start with China. If we take WeChat and Alipay as an example, right now WeChat alone has over 1 billion users. So what is the natural consequence of having over 1 billion users? People want to integrate with whatever software you offer, right? So at the Eiffel Tower in Paris, it's already possible to pay for your tickets with WeChat. Now, we already know that WeChat and Alipay have to hold reserves at the Chinese central bank, the People's Bank of China. Now, if you were China and you have been researching central bank digital currencies for a while, what would be your next move? Now, personally, it wouldn't surprise me at all if China would ask its trade partners, which are historically close to them, a lot of countries in Africa, for example, to hold its CBDC as an object on those balance sheets. So that's the second thing, right? The third geopolitical consequence that we need to seriously consider is that we are now creating money where value systems and privacy considerations and attitudes are literally embedded in the very fabric of that money. Obviously, that's going to have consequences. If we look at the data streams that has shaped basically the last 2 decades, we can get an idea of the magnitude and the sheer tremendousness, really, of what is about to happen. So the fact, again, that money is going to come with a certain data profile is going to be very significant. It's not only going to be significant that if your citizens are using money on which a foreign government has visibility, I mean, that's the first part, but it's also going to be significant that if those citizens are using that particular type of money with those particularly embedded assumptions and conditions, you're not having that visibility anymore. So in that sense, it should definitely be considered on national security level, I would say.
I agree totally, and I'm sure the national security officials in our countries are looking at it. So let's end on the US dollar as the reserve currency. Do you think that the creation of central bank digital currencies in some form or another eventually could, Carlo, have an impact on the US dollar as a reserve currency, or is that way too far in the future?
Well, there are. This is definitely a very challenging question, and I think, as Arwen just said earlier, the dollar is the dominant currency in the world today. I mean, 90% of the foreign exchange turnover runs on dollars. So if there's anybody that stands to lose in this game, is really the US. Now, Libra already, when they were launching their pilot and they were talking about launching it and doing these remittances game, I think that that's already an angle where things can get tricky from a dollar perspective. Imagine Ukraine, for example. Ukraine is a country where a lot of the transactions domestically are done in dollars. It's a highly dollarized economy. People use dollars to purchase goods. They don't use only the local currency, the hryvnia. They use also dollars. Now, what happens in a world where you can use other currencies? If, for example, the Chinese PBOC would allow foreign customers or foreign clients to access digital yuan, how would that have an impact on the dollar demand in the foreign exchange market? So those are really profound questions. I think that to answer your question, Emily, yes, there will be an impact, but I don't think that especially the central bank in the US will just wait and see.
correct. So now we're done, 18 seconds. To summarize, we talked about why are we talking about this topic? It is important and it is complex, but it will be a continuous topic in our blockchain fintech world over the coming years. We talked about what central bank digital currencies are and are not, and I hope you got there's retail, wholesale, it can replace cash, it can substitute for cash, etc. Who are the international players, the BIS, the IMF, our OECD is involved. What are the central banks doing? It's not one size fits all. There are a number of different central banks doing a number of different things, very different, cannot be lumped together. And then finally, what are the geopolitical issues? They are large. Thank you very much.